Emerging markets as a safe haven? That might be a little hard to swallow on a day when Chinese stocks tumbled the most in 4 months, but it's certainly a provocative concept and one behind the investment strategy of our next guest. Nathan Sandler, managing partner at Ice Canyon, a Los Angeles-based firm where he manages $2.1 billion. Ice Canyon is a joint venture with the alternative investment firm Canyon Capital. Prior to co-founding Ice Canyon, Nathan spent 13 years at TCW. So, Nathan, like I say, it doesn't look much like a safe haven on a day like this because emerging markets still seem to be highly susceptible to volatility. So tell us, what in your mind has changed since the last time people talked about emerging markets as a source of stable growth? I'm thinking of the mid-1990s, and then what happened? We had the Asian currency crisis. So what's changed?
Well, let's start from the beginning. Our view is that there's a new order in motion that is fundamentally reshaping the contours of global economic growth. This new order is really framed by the rise of emerging markets as the primary force for global economic growth, juxtaposed or playing off against extreme secular and cyclical weaknesses in the advanced economies. This is sending shockwaves through the global economy. It's changing the way financial flows are moving across borders, and it's fundamentally reshaping the contours of geopolitical and distribution of geopolitical power. We think that we're only in the very early stages of this paradigm shift, and this is probably one of the most important investment themes for the next 10 years. The emerging markets as a primary force for global economic growth, as in contrast to the 90s when emerging markets were really a secondary force for global economic growth, and how that ultimately comes into play with the problems that are being experienced in the advanced economies.
So it sounds like a macro call, effectively, but you're not really a macro investor, are you?
No, I think we use this as a way of shaping our views on investing and investment strategy. But ultimately, I think the most successful investment strategies for the next 10 years are going to be leveraged to the very strong structural fundamentals in the emerging markets. And so the emerging markets are at the lowest, risk indicators in the emerging markets are at the lowest risk point in 40 years. Risk indicators in the advanced economies are at the highest risk point in 40 years. GDP growth in the emerging markets will be 2 to 4 times the rate of growth in the advanced economies. And the whole structural story of the emerging markets is reinforced by very strong demographics, as well as upward income migration and income growth, which has doubled the population of middle income in the emerging markets from 1990 to 2005, from 1.4 to 2.6 billion. So this is really driving the demand for new products, new services. It's driving the demand for infrastructure, for housing, and argues for investors to be taking a much more aggressive position in terms of their approach to the emerging markets. And
many investors buy that idea, but they're still wary of some of the other economic factors at work in emerging markets, like the threat of inflation, for example, the rate at which wages are rising, and how that may imperil some of what are still highly export-led economies.
These are all part of the normal risk factors, and I think as we've seen very clearly since 2008, these are not risks that are unique to the emerging markets. In fact, the emerging markets have demonstrated at the end of the day, because of the very strong fundamental position of these economies, that they can actually put up some very robust defenses against normal cyclical risks. Clearly, the world is on a two-speed economy. Inflation trends are diverging between advanced economies and the emerging markets, but the emerging markets have the tools to deal with these, and these are just part of a normal play of very normal cyclical risks. But the strong structural story is very much the foundation for our very positive view on
Nathan, let's get down to what you actually like. What is it in emerging markets? There's so many different ways of investing in emerging markets as there are in developed markets. How do you go about it? What do you What are you picking?
Well, I think the traditional asset allocation models have really not kept up with the growth and in breadth and depth of the underlying emerging markets. And our focus is really emerging market credit, where we see by far the most interesting opportunities and opportunities that should outperform not necessarily
corporate credit or sovereign credit?
Corporate credit and selectively sovereign credit, but corporate credit is really just in an explosive phase right now.
Is there enough liquidity there?
Yeah, there's very much liquidity. The liquidity is comparable to the advanced economies. I actually think that the liquidity is even better. And so what we're trying to do is attach our investment strategy to three big themes in the emerging markets. Upward income migration. That puts us in power generation, retailing, leisure, and gaming, housing, financing companies that are most highly leveraged to strategic sectors of the economy and are operating in high growth markets. The second theme would be sort of in the special situations space. This is by far where we're seeing the whole global scarcity of capital play out. The access of leading emerging market companies to 4 to 7 year financing is virtually non-existent. And then the third theme would be the Asian currencies. We're a little more cautious toward the European currencies. We have some exposure in Latin America, but we think that there's a real opportunity over the next year in the Asian currencies, and particularly the RMB in China.
Nathan, thanks for joining us. Good to have you here. Nathan Sandler, he's the managing partner at Ice Canyon, making the case for emerging markets as a safe haven.